What it is, y'all, it's Maul here from the Gym Therapy Pod. In today's episode, we're going to be talking about put options. So last week we talked about call options. So if you haven't already, please go check out that video to get more information and more details on what call options are. This week, again, we're going to be talking about put options. So what exactly is a put option? So a put option is you're doing exactly what you did in terms of a call option, but the opposite of that. So you're looking at an underlying security and saying that we don't believe that it's going to perform well. We don't think it's going to do well on earnings. We don't have confidence that whatever they're going to do is not going to turn out well in the short term or even in the long term. So we're going to actually go against that and believe that this particular security is going to drop in value. Cool. So let's jump into an example of a put option. So let's say we have a company that's trading at $100 per share, right? And you just believe that because doing your research, understanding the sentiment around the company, understanding that earnings may not be the best, understanding that the product that you're trying to put out may not actually be the best, and you've done your research, right? So you say, hey, I don't think this company is going to do well. I'm going to go ahead and hedge my position against this company and get a couple of put options against it. So the company is trading at $100 per share. You want to get a strike price of, let's say 95. Let's say 95 at a 95 strike price, right? And it expires within 2-3 weeks, whatever the case may be in terms of your expiration date. So let's say the company has earnings, they don't really do well, they missed on earnings, missed on estimates, they missed on everything that they were supposed to hit on, and the sentiment around the company is bad, and they just do really bad on their earnings and news surrounding the company. It's just not good. Just have an overall bad sentiment, right? That you already understood because you did your research on the company. And so let's say that particular company drops to, let's say $80 around that area. So because you had your position and got a $95 strike price put option on that, you actually in fact did hit on that because it went below your strike price, and now that company went from $100 per share to $85 or $80 per share. Now, the difference in what a call option and a put option is, obviously we're going the opposite way. With the put, we're going to bet against the company going down. A call, we're betting that the company goes up. But the thing that happens that is the same is the difference is going to be your profit. So because a company went down to about $85 and you have a $95 strike price, you have the option to purchase that said particular option chain at 85 or whatever the value of that particular company is, but you can sell it for the higher strike price. So let's say you elected to cash out on your option call for the put option and buy 100 shares of that said company at $80. You can actually sell it for that $95 strike price because that's what you purchased in terms of your put option call. So in a way, you can actually hedge that and make a lot of money on the upside of that because the company has done so poorly in what they're reporting on, and you can make a high profit because of the strike price that you got, and it went below that strike price within a certain expiration date. In closing, call options and put options are great ways to hedge your portfolio in the market because everything does not always go up and everything does not always go down. But in different markets, you have things that are going up and going down. So you want to be able to hedge your positions so that you can catch a downturn in a down market or a bearish market, and you can catch the upturn in a market that's rising or a bullish market. So please analyze these and listen to these different videos on call and put options. Do more research on your own as well. Just wanted to give you guys the basics of what a call option and what a put option is and what they kind of entail and how to necessarily use those. So again, check out the last video on call options, and then obviously check out this video once it's published so you can understand both of them. And again, we're dropping content every single day, every single week. So please like, subscribe, share, tell a friend to tell a friend, share this information, share it to everyone. And again, I thank you all for tuning in. And here's another episode of Tactical Tuesdays, and I'll see you guys next week.